Good afternoon, everyone, and thank you so much for joining us today on our NCUA's webinar on the revised CDFI certification application. My name is Allie Lamberski. I am a credit union training coordinator here in the Office of Credit Union Resources and Expansion at the NCUA, and I will be the moderator for today's program. Before we begin, I do have just a few administrative announcements. If you're having any difficulty hearing my voice, please adjust the volume on your computer. If you're still having any difficulty after that, please let us know using the Q&A feature at the right-hand corner of your console. Just send us a message. Our tech support team will be with you right away. In addition, please make sure that you do allow pop-ups from the site to have full visibility on all materials shown today. And in approximately 2 weeks, a recording of this webinar will be available for on-demand viewing on our learning management system. This material will feature a closed caption video and ability to download a PDF version of this PowerPoint presentation. To access these resources, you do have to have an account on the NCUA LMS. There is no charge for account setup. It is completely free, and it is accessible by anybody that is an employee at a credit union or a volunteer. If you need to set up an account, you can go to ncua.gov/support services, select Credit Union Resources and Expansion, and then select Learning. After creating your account, please do allow about 8 to 12 hours for all courses and learning material to generate, and you will then be able to have access to over 200 courses with us. Before we begin, I do have a brief disclaimer I must read out to you. The materials presented in this webinar are intended as an informative and educational summary of general information and updates to the CDFI certification application. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice, nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the NCUA. This is our agenda for today's webinar. Martha Ninachuk, Director of the Office of Credit Union Resources and Expansion, will give a brief introductory remark today, as well as introduce our speakers. We will then turn it over to our wonderful speakers from the CDFI Fund to conduct their presentation before opening up for a brief Q&A. I will also report on our upcoming events here in CURE, and then end the session by providing our contact information at the end. During this presentation, please feel free to send in any questions you may have using the Q&A feature at the bottom of your console. Before we get started, I do have a brief polling question to ask just to help us have a better understanding of who is joining us today on this webinar. Our polling question is, what asset range best represents your credit union? A, 0 to 50 million, B, 51 to 250 million, C, 251 to 500 million, D, 501 to 1 billion, E, greater than 1 billion, and F, not a credit union. So please take a brief moment just to respond for me. Thank you. All right, thank you so much, everybody, for your response. It looks like we have a great mix of credit unions. I hope that you all really enjoy the material that we have for you today and find it very helpful. I would like to go ahead and turn it over now to my director, Martha Ninachuk, for our opening remarks.
Thank you, Allie. I really appreciate the effort everybody's taken to bring this webinar together. And thank you, everybody, for taking time out of your busy schedules to participate in today's webinar regarding the revised CDFI certification application. The CDFI certification is very important to credit unions because it allows them to apply for awards under the CDFI Fund's competitive programs, such as the Community Development Financial Institution Program and Native Initiatives. CDFI certification, as well as other technical assistance opportunities that assist you, credit unions, in providing financial services to communities of needs. NCUA recognizes the importance of increasing the number of CDFIs, which I believe are around 516 at this point, and works cooperatively with CDFI to continue the dialogue of supporting credit unions' access to CDFI funds. Change is always difficult. That's why we felt it important to offer today's webinar for credit unions to hear from CDFI directly about the certification application requirements. We hope you find this information useful as your credit union works towards a new CDFI certification or to recertify as a CDFI. At this time, I'd like to introduce our speakers. Many of you know both Jeff Merkowitz and Michelle Dickens. Jeff is Senior Advisor at the CDFI Fund and brings over 3 decades of both policy and direct on-the-ground experience in areas of housing, finance, and community development. He previously served as Director of Operations and Legislative Assistant to U.S. Senator Barbara Boxer, and prior to that as Chief Financial Officer for Opportunity Fund, a certified CDFI, where he created the financial infrastructure to manage the organization's affordable housing development, small business, and new markets tax credit loan programs. And Michelle Dickens, of course, everybody has I'm sure heard from or maybe met Michelle. She is Program Manager for the Office of Certification Policy and Evaluation at the CDFI Fund. As Program Manager, Michelle provides oversight of all CDFI and certification and community development entity certification and related activities that support the associated CDFI Fund programs. Prior to joining the CDFI Fund, Michelle's career focused on local and national nonprofit administration and management in the areas of community and economic development. I'd like to give my sincere thanks to both Jeff and Michelle for taking the time today to meet with credit unions and to provide information on the certification process. And at this point, I'd like to turn it over to our speakers. Thank you.
Thank you. Good afternoon, everyone, and thanks to NCUA for allowing us the opportunity to discuss the revised CDFI certification application with you. As mentioned, I'm Michelle Dickens with the CDFI Fund, and again, joined by Jeff Merkowitz, and we will walk through the application process with you and give you more information on the criteria by criteria. So if you go to the next slide, please. Let's go 2 more slides in. There we go. Thank you. During this presentation, we will outline the requirements of the CDFI certification as reflected in the revised CDFI certification application and the related tool, the abbreviated transaction level report, also known as the TLR. The CDFI Fund has been developing revisions for the CDFI certification for several years now, as you might already know, and these final revised documents have come from the Office of Management and Budget, published the proposed revisions to the application in November of 2022 for the final round of public comment. Separately, and around the same time, OMB released the abbreviated transaction level report for a final round of public comment. The TLR collection tool gathers data that supports the target market information in connection with the CDFI certification application. After conducting a thorough review of all comments received, the CDFI Fund made further revisions to the CDFI certification application and the abbreviated transaction level report to provide greater transparency and clarification around the criteria that entities must meet to obtain, maintain, and measure CDFI certification, which is what we'll be going over today. We will not, however, go into detail on the TLR, but you can find related webinar and YouTube videos on the TLR on the CDFI Fund's website. Next slide, please. As a preview, During this presentation, we will provide background on the CDFI Fund and the Community Development Financial Institutions. We'll discuss CDFI certification and our review of the CDFI certification policy, and show a brief high-level overview of the revised CDFI certification application, followed by a more detailed section-by-section discussion of the application. Next slide. To begin with, the CDFI Fund's mission is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. Next slide. And our vision is an America in which all people and communities have access to the investment capital and financial services they need to prosper. Next slide. While initially authorized under the Regal Community Development and Regulatory Improvement Act of 1994, the CDFI Fund has grown over the years and now administers 9 separate programs authorized through 6 different statutes, which I won't read right now, but they are listed here for your review later. Next slide, please. And now we'll move to the CDFI certification and review of the CDFI certification policy. Next slide. The CDFI Fund is responsible for certifying organizations as certified CDFIs, which is a requirement for participation in most of our programs. For the purpose of certification, the CDFI Fund verifies that an organization meets the certification requirements through a series of validations and tests in the CDFI certification application, which is a standardized application form submitted through our Awards Management Information System, also known as AMIS. Once certified, CDFIs are required to confirm on an annual basis that they continue to meet the certification requirements, as well as report on their yearly lending and investment activity through the submission of the annual certification and data collection report, that's also known as the ACR. Next slide, please. To become certified as a CDFI, an organization must demonstrate through the application that it meets a number of statutory, regulatory, and administrative requirements as identified on this slide. It must be a legal entity. It must have a primary mission of promoting community development. It must be a financing entity that primarily serves at least one target market and provides development services in conjunction with its financing activities. It must also maintain accountability to its defined target market components, and it must be a non-government entity, and with the exception of tribal governments, not under the control of any government entity. Next slide. So over the past 2 decades, CDFIs have evolved in scope, scale, and sophistication. The number of certified CDFIs have grown from 196 in 1997, when the first certifications were issued, to nearly 1,500 today, and the total assets held by CDFIs have grown to more than $300 billion. And credit unions make up over 30% of currently certified CDFIs. CDFI certification has become a brand and a qualifier of its own, and not just for CDFI fund resources, but for other federal, state, and local governments, as well as private sector program and benefits. And the types of CDFI financial products and financial services have expanded, as has the use of technology to increase market reach. Next slide. So given the changes within the industry and to the significance of the CDFI certification, the CDFI Fund undertook its review of the standards for certification and the CDFI certification application that reflects those standards to ensure they remain appropriate to the evolving nature of CDFIs and sufficiently protect government resources. This review was made with an eye towards making revisions that would support the growth and reach of CDFIs, especially as it relates to their ability to innovate and take advantage of new technologies, while ensuring that CDFI financing activities are consistent with a mission of promoting community development. Continue to foster a diversity of CDFI types, activities, and geographies. Minimize administrative burden on CDFIs while improving data quality and collection methods, and to promote the efficiencies for CDFI fund staff in rendering CDFI certification determinations. Next slide. So the next two slides will provide a brief yet useful description of each section of the CDFI certification application at a glance. So we'll quickly move past these two slides, and you can, to save us some time to discuss the application in greater detail section by section. So if we can please move to slide number 17. Oops, so one more slide. And one more slide. There we go. Thank you very much. So we will again look at the revised CDFI certification application section by section, so we can move to the next slide. During this section of the presentation, we will provide a general overview of each section of the final revised application. However, there is way more information and guidance available for the application on our website. And we recommend that reviewers read the application and all the guidance materials carefully. As of the opening of the application submission process on December 20th, 2023, only new CDFI certification applicants can successfully gain access to and submit a full application. The CDFI fund will notify currently certified CDFIs directly for when they will be able to submit their application to maintain the certification status. Next slide. So before the full application can be submitted, but after the applicant has entered transactions into the TLR that indicates that it meets the target market requirement, you'll see a new eligibility determination section that will allow potential applicants to indicate whether certain activities or practices that are not already specifically listed as acceptable would meet the standards for CDFI certification or might otherwise be disqualifying. Previously, applicants typically had to complete and submit the application or a separate request in AMIS, and oftentimes engaged in a lengthy back and forth with the CDFI fund before the CDFI fund would make a determination as to whether some part of an application met the standard or not. Instead of this informal determination process, under the revised application, all applicants must now complete a set of questions to determine if they seek to do the following: include any non-pre-qualified financial products or financial services as part of their financing entity and or target market calculations, determine whether the use of certain assets or staff time may be either disregarded or included as part of the financing entity predominance test, designate any non-pre-qualified targeted population as part of their target market, or use any non-pre-qualified target market assessment methodology as well. Or request that an amendment to the standards for responsible financing practices occur. So if an applicant believes all of its activities meet the certification standards, it will respond to each of the questions to indicate that no CDFI considerations is necessary, and then move into certify the TLR before coming back to complete the remainder of the application. It's important to note that positive eligibility determination on any item submitted in advance by the applicant does not guarantee that the remainder of the applicant's activities will meet the certification standards or that its application will eventually be approved. Next slide. After an applicant has determined that it does not need any consideration for eligibility, or that it has already received a response for any of those considerations by the CDFI fund, and that the transaction level data demonstrates that it meets the target market requirements, and the applicants are then ready to begin completing the application, and will begin with the basic information section and provide certain information about the applicant, its affiliates or other related entities, that and about its financial products and financial services that are all related to the CDFI certification requirements. Because of the dynamic nature of the application, this information will help us determine the appropriate questions that will be displayed on the applicant's entity type and other characteristics. So note that that much of the information in this section will be auto-populated based on the data that's identified in the applicant's AMIS account, but the applicant should still review that information to ensure that it's accurate and complete. Most of the information collected in this section is similar to what we collected in the previous application. However, this section now also includes a set of questions on the demographics of an applicant's governing leadership, that is, its governing board or ownership, and of its executive staff. This data is collected for information purposes only and has no bearing on the CDFI certification determination, but it'll help give us a better picture of the CDFI industry. Next slide. Legal entity. The next section of this application is to confirm that an applicant is a legal entity, which is a basic requirement for CDFI certification. This section of the application has been significantly streamlined, and now, as was recommended by a number of stakeholders, applicants will demonstrate that they meet the test separately and fully registering with SAM.gov to obtain a unique entity identifier. This will eliminate the need for most additional documentation, and most of this section will be auto-populated. If any of the pre-populated data fields in the AMIS displays incorrect information, it must be corrected before the submission of the application. Next slide.
So some of the most important changes to the application come as part of the primary mission test, which has been significantly strengthened to help ensure not only that an applicant has a stated mission of promoting community development, but that its activities align and are consistent with such a mission. For the CDFI fund to make this assessment, applicants will provide information in this section that will allow the CDFI fund to consider whether the activities of the applicant are purposefully directed toward improving the social and/or economic conditions of underserved people and/or residents of economically distressed communities, as is required by CDFI fund regulations. This information will include documentation of the applicant's community development mission, as well as whether the applicant has a community development strategy and whether it meets the CDFI fund's standards for responsible financing practices consistent with a community development mission. Next slide, please. As mentioned, in addition to demonstrating a documented mission of promoting community development, applicants are now required to demonstrate that they have a community development strategy, This can be demonstrated either through a board or owner-approved strategic plan, or if the applicant does not have a strategic plan, through a board or owner-approved narrative. Also, new to the primary mission test, an applicant now must demonstrate that its financing activities meet a set of standards for responsible financing practices, which will help to ensure that those financing activities are consistent with a community development mission. The application questions reflect principles that a CDFI's financial products should not harm consumers, be affordable and originated based upon an assessment of whether a borrower is able to pay back a loan, and have terms and conditions that are transparent and understandable to the borrower. Next slide, please. The standards specify a number of ineligible financing practices, including offering consumer loans that allow for an APR exceeding 36% as measured by the Military Annual Percentage Rate, or MAPR, if those loans also have an annual default rate over 5%, include a leveraged payment mechanism, have a repayment timeframe that exceeds 12 months for any such loans of $1,000 or less, if for a period of 12 full months after the issuance of any such loan, the applicant does not waive any upfront fees for any refinance or new loan issued to the same borrower, if any fees associated with such installment loans are not spread evenly over the life of the loan or pro rata refundable, in the event of early repayment, including through a refinance, or if all payments on any such installment loans are not substantially equal and do not amortize smoothly to a zero balance by the end of the loan term. So just to be clear, lending above 36% MAPR for consumer loans is not by itself automatically disqualifying, but would be if in combination with any of the additional listed practices or characteristics associated with those loans. Continuing, also disqualifying is originating or otherwise offering loans that exceed interest limits that apply to non-depository institutions in the state where the borrower resides. This is intended to prevent so-called rent-a-bank lending that has been used to evade local interest rate limits. Next slide, please. There are also a number of ineligible practices focused on mortgage lending, specifically single-family owner-occupied residential mortgage loan products. With some exceptions that are spelled out more specifically in the application and guidance, an applicant would be found ineligible for certification if it fails to verify the income or assets of the borrower of any such mortgage loan product, offers mortgages that include negative amortization or interest-only payments, charges upfront points and fees to the consumer that exceed 3% or the qualified mortgage limits for smaller loans, or underwrites any such mortgages at less than the maximum rate in the first 5 years. Also prohibited for the purposes of certification are selling charged-off consumer or small business debt to debt buyers. For FDIC-insured applicants, a current CRA rating below satisfactory, and for any applicant with equity investment financial products, using those products to gain control over an investee or leveraging for its own benefit the assets of any of its active equity investees. Next slide, please. In addition to practices that are automatically disqualifying, the standards for responsible financing include some practices that may disqualify an applicant from certification, but for which the standards provide some flexibility and allow an applicant to offer an explanation in the application of how the applicant's engagement in that practice is consistent with a community development mission. For example, for the purposes of CDFI certification, applicants' underwriting standards should include an evaluation of a mortgage, consumer, and/or small business borrower's ability to pay back a loan. Applicants that do not originate all such loans based upon such an assessment may be determined ineligible for CDFI certification, but will have an opportunity to offer a narrative explaining how the absence of such an assessment serves a community development purpose. additional practices that are generally considered inconsistent with a community development mission, but for which an applicant may have to demonstrate that it meets additional conditions and/or will have an opportunity to justify in the application, include offering small business loans that allow for an APR exceeding 36%, also offering certain mortgages with balloon payments, or unless they are provided through a government program, mortgages that carry an original maximum term longer than 30 years, and charging excessive overdraft or non-sufficient funds fees or other practices that are related to these fees that are harmful. I want to come back just very briefly to the questions that cover mortgage lending and emphasize that users should pay particular attention to the scope of the different questions, since although they are very similar, there are some important differences. The scopes are spelled out in the application and guidance, so I won't go into all the detail here, but one important difference is that the question on evaluating a mortgage borrower's ability to pay back a loan includes subordinate loans, while other questions apply only to non-subordinate mortgages. Next slide, please. One final practice to highlight, the application includes questions for applicants that offer small business loan products on whether they disclose in writing the periodic payment due, the total amount to be repaid over the life of the loan, the total finance charges over the life of the loan, and the APR of the loan. We are delaying implementation of the responsible financing standards related to these disclosures in order to give additional time for lenders to make any necessary changes to their software systems. So for now, these questions are for information purposes, but beginning January 1, 2026, new applicants will be required to attest to making such disclosures in order to become certified, while CDFIs that are already certified at that point will be required to do so in their ACR no later than October 1, 2026, in order to maintain their certification. Next slide, please. It is important to note that the primary mission test, and especially the standards for responsible financing practices, must be met by not just the applicant, but by the parent entity of the applicant, as well as any of the applicant's affiliates that provide financial products and/or financial services. Finally, as was indicated previously, in order to allow for some flexibility and to avoid unintended consequences, if an applicant is engaging or seeks to engage in any financing activity that does not currently meet the standards for responsible financing practices of the primary mission test, but that it believes serves a community development purpose and is consistent with a community development mission, the applicant may seek amendment to the standards that allows for that activity. To be clear, however, the CDFI fund will not approve individual exceptions to the primary mission test or make case-by-case determinations. If the CDFI fund believes a specific activity under certain circumstances is consistent with a community development mission, we will amend the standards, and that amendment will be made available to all CDFIs and future applicants. If, on the other hand, the CDFI fund denies the request to amend the standards, the applicant will be prohibited from engaging in the practices to remain eligible for CDFI certification. Next slide, please.
The next section of the application measures an applicant's ability to meet the regulatory requirement that a CDFI shall be an entity whose predominant business activity is the provision in arm's length transactions of financial products and/or financial services. Insured depository institutions, depository institution holding companies, and credit unions, but federal insurance are deemed to automatically meet the financing entity test. So if the information in the credit union's Amos organization profile is confirmed in the basic information section as accurate, the financing entity section will not be available to you. Next slide, please.
The next section of the application measures an applicant's service to a target market, which may be a geographic investment area, a low-income targeted population, and/or an other targeted population. Next slide, please. To meet the certification requirements, an applicant generally must demonstrate that it directs at least 60% of both the number and dollar volume of its financial products to an eligible target market. To be clear, applicants can serve more than one target market component, and the non-duplicative percentage of financial products delivered to those different target market components can be combined to meet the target market benchmarks. The revised application also implements a new financial services option that may be of particular interest to credit unions that falls short of the financial products threshold to meet the target market test. Under this option, a depository institution that has directed less than 60%, but still at least 50% of either the dollar volume or the total number of its financial products to one or more eligible target markets can still meet the target market test if at least 60% of its total unique depository account holders are members of one or more eligible target market component, and it delivers at least 60% of either the number or dollar volume of its financial products, and at least 50% of the other to one or more eligible target markets. Next slide, please. There are additional target market flexibilities reflected in the new application as well. For example, once an entity becomes certified or recertified under the revised application, if it fails to meet the target market benchmark over its most recently completed fiscal year, we are phasing in an option that will allow the CDFI to remain certified if it has met the benchmark over the 3-year period through its most recently completed fiscal year. There's more explanation on this in the FAQ and how the option will be phased in. Another flexibility is the elimination of the requirement to submit a target market map in most situations. Specifically, if an applicant's target market is made up of pre-qualified investment areas or a pre-qualified targeted population. A pre-qualified investment area consists of those census tracts that the CDFI fund has determined meet statutory economic distress criteria. Applicants serving these qualifying census tracts and/or one or more of the pre-qualified targeted populations, that is, a low-income targeted population or one of the listed other targeted populations, are not required to develop a map of their target market and will be able to count a financial product to members of those target markets wherever they reside toward their target market thresholds. That also means that simply expanding the geographic scope that a CDFI serves no longer will require a target market modification, and such a modification would be required only if a CDFI seeks to serve a new target market type for which it has not been approved. Next slide, please. Although there are no credit union CDFIs with customized investment areas, an important change to note is a new condition for counting the financing activity in the non-qualifying census tracts of such target markets, that is, those census tracts that do not individually meet the investment area distress criteria, that applies to non-metro county investment areas as well. Until October 1, 2026, applicants serving a county-wide investment area, which by regulation can only be in a non-metro area, must direct at least 75% of their financing activity within the individually qualifying census tracts of the respective non-metro geography for activity in the non-qualifying tracts of that non-metro county to count toward the 60% target market benchmark. Beginning October 1, 2026, this standard will go up to 85%. Next slide, please. The revised application also includes the newly designated pre-qualified other targeted populations of Filipinos, Vietnamese, and persons with disabilities. There's also a major difference in how applicants must compile and submit their target market data in the revised application. Target market data that was previously collected in the aggregate will now be collected by transaction in the TLR and abbreviated TLR, which will both allow for greater verification of an applicant's target market activity and provide a more complete picture of the impact of the industry as a whole. As part of our efforts to increase transparency and reduce burden, whereas previously applicants had to describe and seek approval for each target market assessment methodology they used to confirm financing activity to their identified target markets, the revised application includes the ability for applicants to select from a set of pre-approved target market assessment methodologies that applicants can use and rely upon. As has always been the case, applicants are still required to use only those target market assessment methodologies that have been specifically approved by the CDFI fund when compiling target market data, and to verify whether any financial products, depository accounts, board members, and/or credit union members meet the target market criteria. If an applicant seeks to use a methodology other than one of the list, from the list of pre-approved methodologies, it must request a determination from the CDFI fund in advance of completing its application for submission. The list of pre-approved methodologies is available on the CDFI fund's website and will be updated as appropriate. Next slide, please.
The next section of the application covers development services. The CDFI fund statute mandates that the CDFI must provide development services in conjunction with equity investments or loans directly or through a subsidiary or affiliate. And our regulations state that a CDFI directly through an affiliate or through a contract with another provider must have a track record of providing development services in conjunction with its financial products and/or financial services. The requirement of this section of the application has not changed significantly from the prior application, although our efforts at increasing transparency around the standards to meet the test seems to have highlighted areas where those standards may not have been fully understood. We have continued those efforts to increase transparency in the revised application and have further refined our language to make clear what is an eligible development service and what is not. The application states that an eligible development service is a structured training, counseling, or technical assistance service that promotes the access to and/or success with an entity's financial products and financial services. It is also a separate and distinct activity from routine customer services, marketing, or origination activity. To meet the requirement for CDFI certification, applicants must demonstrate that at least one development service, let me repeat that, at least one development service is regularly offered to their clients and is provided on an annual basis. Demonstrate that development services provided via contract with a third-party entity are routinely reviewed and monitored, and clearly identify how any development services prepare or assist current or potential borrowers or investees to use at least one of the applicant's financial products or financial services. Next slide, please. There is one specific issue that we want to address, given the number of questions that were received, and that has to do with development services delivered to youth. Depository institution applicants are allowed to identify financial education as a development service if it promotes the opening of a depository account or building savings in an account with the applicant. And this applies to financial education for youth as well. Although other financial education for youth under 18 does not fall under the definition of development services, the CDFI fund allows financial assistance award funds to be used to provide a broader range of such financial education. Next slide. Okay, the next section of the application tests whether an applicant meets the statutory requirements to maintain accountability to its target market. Next slide. Individual board members can be determined to be accountable to one or more target market components on the basis of any of the sources of accountability listed in this table. To demonstrate accountability to an investment area, an individual can be a resident of a qualified census tract, the owner of a small business primarily located in qualified census tract or tracts, or the owner of a small business that principally employs and or principally provides goods and services to residents of qualified census tracts. They can be an elected official primarily representing residents of the qualified census tracts, a staff member of a non-qualified third-party community development mission-driven organization that primarily provides services to residents of qualified census tracts, or for applicants who are serving investment areas located in native geographies, enrolled in a federally recognized tribe. To demonstrate accountability to a low-income population, an individual can be a low-income individual themselves, or a staff member of a non-affiliated third-party community development mission-driven organization that primarily provides services to low-income people. And finally, to demonstrate accountability to an other targeted population, an individual typically must be a member of the targeted population with some exceptions for specific other targeted populations. For applicants serving other CDFIs as their OTP, the board member can be a staff member of the certified CDFI, of a certified CDFI. And for applicants serving people with disabilities, the board member can be a staff member of a non-affiliated third-party community development mission-driven organization that primarily provides services to people with disability, or a family member of a person with disability. Family members include those that are related by blood, including half-siblings, and by adoption or by marriage. Next slide. Next slide, please. At the organization level, the revised application places greater emphasis on governing boards as the source of decision-making in demonstrating accountability to a target market, but provides applicants, in part depending on the institution type, with 4 different options. So we'll discuss 3 of the 4 options that are most typical for credit unions. For applicants that want to use a formal governing board only, it must demonstrate that at least one governing board member is accountable to each proposed target market type, and at least 33% of the governing board is accountable to the overall proposed target market. All applicants may demonstrate accountability through a governing board that's supplemented by an advisory board. Using this option, they must demonstrate that at least 20% of the governing board members must be accountable to the overall proposed target market. At least one advisory board member must be accountable to each proposed target market type. At least 60% of the advisory board must be accountable to the overall proposed target market. At least one governing board member must also be a member of the of the advisory board, and the applicant must have adopted an advisory board policy. Next slide, please. So credit unions specifically have the option of demonstrating accountability through an advisory board that's supplemented by their membership if it can demonstrate that at least 33% of the credit union members are determined to be members.
Go back one slide. Sorry.
Oh, I'm sorry, I didn't look up. Thank you, Jeff. Let me start that over. Credit unions specifically have an option to demonstrating accountability through an advisory board supplemented by their membership if they can demonstrate that at least 33% of the credit union members are determined to be members of at least one target market type in the overall proposed target market. At least one advisory board member is accountable to each proposed target market type. At least 60% of the advisory board is accountable to the overall proposed target market. At least one governing board member is also, again, a member of the advisory board, and the applicant also has adopted an advisory board policy. I will skip the fourth section option for accountability and move on to the next slide, please. Thank you. So note that these options for demonstrating accountability reflects changes that have significant implications that benefit applicants that seek to serve multiple target markets or a national investment area. Previous geographic requirements on accountability on accountable board members have been an impediment to the CDFI expansion and the ability to serve an approved national target market. Now, however, under these options, board member sources of accountability are based upon the target market type separately from the geography of the target market. So additionally, for applicants with multiple target markets, the revised certification application allows for target market representatives to meet accountability standards collectively, eliminating a lot of burden associated with the previous application, which required each proposed target market component to meet the accountability standards separately. Next slide. Finally, there are some limitations on board members with certain financial interests in the CDFI certification applicant, including board members who are or who have family members who are employees, principals, or partial owners of the applicant that would prevent them from being identified in the application as accountable to any of the applicant's target market components. However, the revised application does not, as had been proposed, disallow board members who receive compensation for their board services or those who have an active financial product with the applicant from potentially being accountable to the target market. Instead, the applicant must have a policy requiring any board members with active financial products to recuse themselves from decisions that may involve their financial product. Next slide. The final section of the application for CDFI certification purposes is to confirm that the applicant is, as required by statute, a non-government entity. There are no significant changes in the application to this section, which poses a series of binary questions to identify issues or circumstances that may prevent an entity from meeting this criteria. Next slide.
So for applicants, finally, for applicants that also want to be designated as a Native American CDFI, there's one additional section of the application. There are two requirements to receive this designation, namely that the applicant direct at least 50% of its financial products to one or more Native communities and maintains accountability to a Native community. Next slide. And let's just keep moving to the next one. So in the interest of time, because we haven't left a lot of time for Q&A here, but there's additional information on our website, and we have resumed our CDFI certification monthly conference calls in February 2024. So in these calls, we provide certification-related information and respond to questions live. So you can find information on those calls on the website. Final slide. As always, the CDFI Fund is here to provide information and applicants on the CDFI certification journey. Applicants may reach out to the CDFI Fund for additional information regarding the CDFI certification application, TLR, or any AMIS-related issues using the contact information shown in this slide. So thank you again to NCUA for this collaboration and allowing us to participate in this call today. And I will turn it over to our moderator to see if we have any questions.
Thank you so much, both Jeff and Michelle, for such a fantastic presentation. I know it was a lot of information, but we do really appreciate you taking the time to be here to help assist credit unions. You are correct. During the presentation, we did have a few questions that came in, so we will ask just a couple. The remaining questions, just the ones that we are not able to get to, will be posted along with all learning material at the end of this presentation to our learning management system. So I will go ahead and turn it over to my colleague, Ron, who will lead us in our Q&A session.
Great. Thank you so much, Allie. And thank you again, Michelle and Jeff, for a great presentation. We do have a couple questions. The first one is, my understanding is that the CDFI fund does not intend to allow existing CDFIs that reapply an opportunity to cure issues if their application is rejected. Taking away this important credential for failure to comply with new rules that are still being interpreted, it seems problematic. Shouldn't the CDFI fund give existing CDFIs an opportunity to cure if the CDFI fund determines there is an issue preventing recertification?
Michelle, do you want to respond or do you want me to?
I will back you up.
Okay. So I guess I just want to note that, currently certified CDFIs have been given a 1-year grace period from the date the new certification standards were announced in December of this past year. So in order to come into compliance with those standards. For those that are struggling to meet the 60% target market threshold, this is not a new requirement. We are enforcing it more strictly than we have in the past, but as noted in this presentation, we have also added a number of new flexibilities, including the removal of target market geographic restrictions that should make it easier for CDFIs to get credit for qualified activity that previously would have been treated as ineligible. I'll also note that, in addition to the formal grace period, we've had a more extended period, basically since the beginning of the blackout period for applications beginning in October 2022, during which time we have not been enforcing the target market requirements and no CDFIs have been decertified. So there's been a lot of time to really come up to the standard that has always been in place for CDFIs. And also as noted, going forward, we will be gradually implementing an opportunity for CDFIs that fail to meet the target market requirements in any given year to retain their certification if they are able to demonstrate that they meet the requirements over the most recently completed 3-year period. CDFIs can come back in for recertification at any point. So there's no, if you fail to be recertified, once you're in compliance, you're able to come back in and get recertified.
Thank you, Jeff. Michelle, did you want to add anything to that, or should I go to the next question?
There's no more to add there. Jeff did a great job. We can move on to the next question.
All right, great. Thank you so much. Our next question is, will you talk more about excessive overdraft fees? And perhaps while you're talking about that, provide examples of practices related to these fees that would be prohibited.
Sure. So what the questioner here is asking about is there are some questions in the primary mission section of the test that ask about an applicant's for any of the applicant's depository accounts, whether the account holder is subject to any potential overdraft fees. And there are questions about, whether or not the highest dollar amount charged for such a fee can exceed the amount of the item being cleared, and questions about the annual limits, whether there are any annual limits on the number and frequency of such fees that can be charged to an account holder. And we do, so in terms of, these are not bright line questions in the application. So, for applicants that do charge more than, in which a fee can exceed the amount of the item being cleared, or for which they, if the account holder can be charged more than, 6 fees in a rolling 12-month period, there's an opportunity to, provide a narrative and explain how, this may be consistent with a community development mission, whether, what other sort of supports that are offered to the account holder, to limit the harm that may be experienced by the account holder, in such instances. So, that's what we're focused on right now. At this point, like I said, these are not bright line questions, but we want to see, how an applicant is, managing or working with the account holders that may be at risk of being charged high numbers and high dollar amounts of fees.
Excellent. Thank you so much, Jeff. So that's all the time we have for our Q&A. I do want to mention that any questions, as Ali already said, any questions that came in that we did not get to, we will ask our speakers to answer. They will be posted with a recording of this webinar, along with a copy of the slides, to the NCUA Learning Management System. Ali, I turn it back over to you.
All right, thank you so much, Ron. In addition to this webinar that we have hosted today, our next webinar will be next month, March 28th, and it will be featuring free data tools and resources available to credit unions. We will have a speaker with us from the U.S. Census Bureau to go over some great resources we have for credit unions. We also have a busy time coming up here for CURE. We will be doing our annual MDI Awareness Month in June 2024. So please keep an eye out. We have a lot of really great information and items planned to share with credit unions. We also will be having our 2024 CDRLF grant round again. While we do not have the specific dates yet, we will be in contact and releasing information as we know more. So please keep an eye out on your inboxes for all of that additional information. And like Ron had mentioned, we will have all of this information available for you on our learning management system. Again, accounts are completely free on our learning management system, and we currently have over 200 courses available for you to access. And we will have, again, this presentation, the slides, and any unanswered question and answer sessions on there, in addition to all previous webinars we have hosted. If you need to contact anybody in CURE for any questions that you may have on items such as chartering, field of membership expansion, items like that, please feel free to contact us using this information that we have provided. I have included email addresses and phone numbers. To reach any additional items within CURE, such as questions on the CDFI certification, our grants and loans team, or any learning information as well, I have included our contact contact information. Please reach out to us with any questions that you may have. We are happy to assist in any way that we can. I want to thank everybody again for their attendance, as well as thank our presenters, Jeff and Michelle, for joining us today from the CDFI Fund, and my colleagues for their assistance today with the webinar, Franz for assisting with webinar support, Ron for assisting with Q&A, Martha for our wonderful introductory remarks, and Gerardo for our slides, as well as Amy for providing additional support. Thank you very much, everybody. I hope you enjoyed today's presentation and have a wonderful rest of your day.